We told you earlier about the recessionary state of consumer confidence right now, but business conditions and confidence, they're a key measure the Reserve Bank watches closely. The NAB Business Conditions survey out today show there were notable declines in trading, profitability and employment in May, which is likely to continue into June, July and into the rest of the year as prices remain high and interest rates keep going up. But Alan Oster, Chief Economist at NAB, says brace yourself because there are 2 more rate rises coming. And he joins me now. Alan, many thanks for your time. Always good to chat. I mean, the state of the economy right now, it is worrying, especially given that inflation is not easing and it is likely the Reserve Bank will have to raise rates again.
Yeah, I think the focus of the Reserve Bank's all on inflation. What our survey was saying is there's been a big loss of momentum. Forward orders, which we think is really important, and it leads what happens to conditions, is sort of returning really bad results. Sort of results we haven't sort of seen outside of major recessions. And in retail and wholesale, they're like -20 rather than -5, which is the aggregate. But what you're seeing here, and you can see it on the chart, is that the deterioration of what you're seeing in business conditions, forward orders. And that forward orders, that black line, that's got a lot of information in it.
So just go through that, because you say that that is rarely seen. But when it's seen, it is really, if you like, an amber light for the total economy.
I think it's more than that. We've seen, as I said, forward orders that are negative, but only during major recessions like 91, GFC and COVID. Outside of that, we haven't had negative forward orders. And, you go from -5, which is across the economy, to -20, 25 in retail wholesale. It says the consumer is slowing significantly and will continue to slow because, sure, the RBA may have a couple more to go, but they're already 3 or 4 behind in terms of what the Reserve Bank's already done in terms of consumers paying for these things. So you've got 1.5% of interest rates on our forecasts still to go in terms of affecting consumers' spending habits. And so that's really means that for us, we see absolutely no growth in the second half of this year, and we worry about whether it's recession or not. Depends on how you go. But my sort of general measure is that if you get unemployment up 12 or up 1% in the next 12 months, that gets really close to recession. We see unemployment going from 3.5 to 4.6 by the middle of next year. So that's a concern.
And the one thing right now, up until now, is that companies have tried to hold on to their workers simply because they've been too hard to get. And, of course, that's created something of an increase in wages. We've seen that in those national accounts figures last week. But now it's a situation where they're going to have to make a choice as to whether they can hang on to those workers or not.
That's right. And I think my sort of bottom line is I expect inflation will start to come down maybe a bit quicker than what the Reserve Bank expects, because business will then say, well, hang on, I need to get or keep my market share going. And that will sort of make them reduce their prices a bit more. So prices are still very sticky. I think they're past the peak, but, they're still not really doing what the Reserve Bank wants. And to get it there, I think the Reserve Bank is saying, well, if we have to have a mild recession, we'll have one.
Because the other aspect of this is there has been forecast a slowdown by Treasury, by the Reserve Bank, of a slowing of the Australian economy, but no recession so far. What you're saying now is that the odds of a recession, because of those employment numbers, because of this business outlook, because of the increasing rates while the economy is slowing, the risk of that recession is now heightened.
Oh, it certainly has. I mean, if I had to guess, my guess would be 50-50 and maybe a little bit above 50 for a recession. But particularly when I look at the big picture rather than the quarter-on-quarter story, we didn't have a quote recession during the GFC, but I think everyone think we did have one, and so I think we're in that sort of situation again. And unfortunately, you just don't know where these dynamics go because a lot of consumers out there have never seen the sort of rate of increase that we've seen in interest rates, and so it's a bit of applied psychology in terms of what's happening. But the survey and all our internal data says it's slowing now.
Alan Oster, I'll tell you what, it's pretty bleak news, I've got to tell you, especially if there are those 2 more interest rate rises that you talk about there. Many thanks for your time today.
Thanks, Ross.